And you're like, my God, I mean, look at what's happening. Whether it be Cloward Piven, whether it be, are we trying to lose the reserve standard? Are we trying to reset the system? Where is the fiscal sanity of spending $1 trillion every 90 days, 100,000 per second? Where is it? I just think this stuff is getting out of hand. And when we talk about the acceleration, you know, it's accelerating, and it's accelerating in a big way. And I think it's time for people to really start to prepare. And that would mean things such as food and water and a gun, and shoot your gun, know how to use it.
In today's news recap, silver price rises to near 31.50 due to rising geopolitical tensions. Silver price extends its gains for the second consecutive day, trading around 31.50 per troy ounce during the European hours on Wednesday. The upside of the silver prices is attributed to the safe haven flows amid escalating geopolitical tensions in the Middle East. Iran launched over 200 ballistic missiles at Israel on Tuesday, shortly after the U.S. had warned that a strike was imminent. The Israel Defense Forces reported that several of the missiles were intercepted, according to Bloomberg. On Tuesday, the weaker than expected numbers made room for the U.S. Federal Reserve to continue lowering rates. The index came at 47.2 for September, matching the reading with August's print, but came in below the market expectation of 47.5. However, Fed Chair Jerome Powell said on Monday the central bank is not in a hurry and will lower its benchmark rate gradually over time. The CME FedWatch tool indicates that markets are assigning a 62.7% probability to a 25 basis point rate cut by the Federal Reserve in November, while the likelihood of a 50 basis point cut is 37.3%, down from 57.4% a week ago. Prolonged higher interest rates keep the opportunity cost higher of holding non-yielding assets like silver, making it less appealing to investors who seek more attractive yield-bearing alternatives. Silver demand has been bolstered by China's fiscal and monetary stimulus, particularly benefiting industrial applications in one of the world's largest manufacturing hubs. However, weaker than expected demand growth in China, compounded by data indicating a decline in manufacturing activity, might have limited the upside potential of the gray metal. Now we'll show you the best clips of the latest interview, but first smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
To mention, in a world of decreasing privacy, the only lack of privacy that you have whatsoever in buying metals is just that wire or that check. And think of all the silver that you bought in your day, you know, and how you bought it and where you bought it. You probably don't even remember. And so it's gone. Once you buy it, it's gone. Maybe you buried it in your backyard and you're a midnight gardener. Who knows? But the point of it is, in a world of
I like that.
Of decreasing privacy, it's a bastion of it. And you know, you end up reading the or watching The Great Taking, the Great Taking, and you realize that counterparty risk is a real deal. So yeah, I would simply say it's never been more important to understand, and this is why the central banks, man, are buying gold and silver and selling treasuries, for the removal of counterparty risk, for the removal of these types of things. Now, it's a long departure from Ford Motor Company listening in on your calls, but the same thing is true. It's about privacy and lack thereof. And in a world where everything from your cell phone to your car to your Alexa to everything is listening to you, to your all of your anyways, with everyone listening to you and everything being digital, and the risk involved across the globe in that type of lack of privacy. Yeah, I think it's one of these deals where owning gold and silver. Hey, you guys, sorry, Jay.
Okay.
Anyways, lack of privacy is something that should really be, or adding privacy to your portfolio is something that is woefully underappreciated maybe from the outside when we talk about owning metals, but that's why the central banks are doing it. And you're like, my God, I mean, look at what's happening, whether it be Cloward Piven, whether it be, are we trying to lose the reserve standard? Are we trying to reset the system? Where is the fiscal sanity of spending $1 trillion every 90 days, 100,000 per second? Where is it? Where is the history of this country? Pledge of Allegiance, honoring the flag, honoring our leaders, like our principals and our teachers and our police officers and all of defund the police. I don't mean to go on a soapbox, but I just think this stuff is getting out of hand. And when we talk about the acceleration, it's accelerating, and it's accelerating in a big way. And I think it's time for people to really start to prepare. And that would mean things such as food and water and a gun, and shoot your gun, know how to use it.
In today's news recap, a guide to the gold-silver ratio. The gold-silver ratio measures the relative value of gold to silver, but why is the measure useful for investors? The gold-silver ratio has long been considered an important metric to gauge the best time to invest in precious metals. If you monitor gold prices, you'll know that although the yellow metal is usually seen as a stable investment, its price has recently surged, thanks to central banks buying up the commodity and its diverse use in various industries like nanotechnology and cancer therapy. Silver is traditionally more of a volatile investment, and after years in decline, it might just be set to make its way back to form. Whether you are new to precious metal investing or want to diversify your portfolio, it's useful to know the relative value of silver against gold, as it can affect investor sentiment, help understand economic trends, offer a hedge against inflation, and influence your investment strategy. The gold-silver ratio is the oldest tracked exchange rate that is still in use, and it is a guidepost for investment decisions, be it inflation, deflation, market crashes, and broader economic trends. The higher the ratio, the more expensive gold is relative to silver. While there's no definitive benchmark for the ratio, assessing the current gold-silver ratio against its average in recent years can be one factor that investors can use when making an assessment on when to buy or to swap holdings of either metal. Do next. Divide the current ratio by the average, and you can calculate whether one metal looks too expensive or the other too cheap based on average performance. If the gold-silver ratio was still based on the availability of the natural supply of the metals, it would stand at 15-1. Estimates suggest there is roughly 15 times more silver in the Earth's crust than gold. But gold has been seen for years as a store of value, a hedge against inflation, and the gap between gold and silver is ever mounting. In April 2020, the gold-silver ratio reached a record 125-1 as a response to the onset of the COVID pandemic. Today, the ratio has dropped from those heights and is now sitting around 84 ounces of silver to 1 ounce of gold. Now, we'll show you the best clips of the latest interview, but first, like, subscribe, and hit that notification bell so you don't miss any recaps. Enjoy the episode.
India imported 560 tons a year ago in the first 6 months of the year, which was a record year. Those numbers are up sevenfold here in 2024. They've imported 4,554 tons from what they tell us. This is an acceleration to the nth degree. Oh, yeah. And 1 metric ton is 32,150.7 troy ounces. So let's do the math here. I don't even know if my calculator will do that. 32,150 ounces per 1 ton times 4,554. That's 14,641,100. So 14,641,000. Is that right? Hang on. Let me see. 1, 2, 3, 1, 2, 3. Or is it 1,464,111,000? That's what it is. So they have spent so far In the first 6 months of the year, 1 billion at today's numbers, $464,111,000 in silver imports that we know of. And China, as we've talked about, the second largest producer in the world, is flying all around the world buying concentrate and doré. And this is and if you realize that in the month of August, 8.1% of the entire LBMA float was delivered, about 26 million ounces in 1 month. 8.1% was taken off of the LBMA. How many more months can they do that? How many more months can they do that before it's all gone? And it's not just silver. Physical gold is being drawn down from the LBMA to record rate also. In the second quarter of 2024, 329.2 tons or 10.6 million ounces of physical gold was drawn from the London OTC market. And this is a market that their daily trading volume is 17 million ounces, although it's 10 times understated. So you're talking 170 million ounces of gold they're trading per day and 2.9 billion ounces of silver per day. They don't have anywhere near that. They have
Right.
10 times less than that amount on the exchange. It's all paper derivatives.
Right,
And that is why you're seeing the country stand for delivery, because they know they don't need to fire missiles at us like they're doing right now in Israel. Instead, they can blow up the exchanges that are controlled by the biggest Western commercial banks in the world. And one of them is going to go down. I have a feeling, I don't know why, it's a premonition that Bank of America will be sacrificed. And if you were to do that and let it get bailed in, the ramifications would be extraordinary. The amount of rushing to the banks to close out people's accounts would blow up the entire banking system. And really, that is what they want. They want to call the banks. They want to issue a CBDC. And it's a lot easier to do it on a handful of big commercial banks than 5,000 regional banks. So these are really crazy times, man. It really, really is.
What do you think of Andy's take? Do you think gold and silver price manipulation will end up soon with prices soaring to record highs, or do you disagree with him? Post in the comments section your price prediction for silver by the end of the year, and share with the stackers your exit strategy or buying levels. Me personally, I'd be looking forward to unwind a significant portion of my silver at $50 and would be selling all my stack if we get past $100. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.